Oh, here it says live up top now, and it's has a ticker counting the seconds.
Yeah. All right, we're live on YouTube right now.
Yep.
No, we're like live on YouTube too.
All right, we're live on YouTube right now.
Yep.
Because there's my
We're
channel.
live on YouTube.
All right, so now let me just see if this is gonna work. No one's showing up, but let me see. Can I enable chats? Join the conversation interaction. Join the conversation to interact with the creator and others watching this. One is watching. That's probably you. You're watching it, right?
Yep.
That's you. There's only one watching. But I don't really have a big YouTube following, but not sure if anyone's trying to get in.
I was able to type in a comment.
Oh, maybe it does. It has to do with YouTube. You have to be on YouTube, I think.
Yep. I had to sign in to YouTube or connect StreamYard and YouTube in order to do the comment.
Let's see if that helps. I think that might be what the problem is. Yeah, because once I hit live and then you saw it show up on YouTube, and people have to have. I recall now when I'm on with TJ, your YouTube symbol shows up next to your name. I guess that's a way of kind of how they can regulate who enters and who doesn't. You have to, you have to almost have. It's like registering in a sense. Like I don't know.
Yeah.
I don't know, but while we're waiting, let's look at let's look at one of your stocks. And what was that? SRM?
SMR.
SMR. Excuse me. I like the chart. Only thing is, as I said earlier, it came from maybe like $10 or $11. Let's say $11.50. It's up to 23, so it's doubled. It's doubled. But on a pullback, you get a pullback back. Maybe between the 8 and the 21, maybe to that 21, which would coincide with the 50 and the 200-day moving averages. That would be a nice area to get either long shares, sell some puts, buy some call spreads, anything like that. Anything that gets you long delta. And the chart looks decent. It really does. And it's got all the options. It's got weeklies. Yeah, you got weekly options. Oh wait, that's something else. SMR.
Yeah.
Yeah, you got weeklies. You got performance. The tab is using action to improve. Let Chrome make it inactive. Okay. You got weeklies.
Take a look at the weekly chart for SMR, or the weekly.
Yeah, so we definitely have this. By the way, what is this? Weekly 3 years. I guess it doesn't have a lot of history, right? It's not been around.
No. Yeah, it's not. They're relatively new, I think.
So it went parabolic from 7 and change 32. So it went parabolic. Arthur's here, so somebody else just showed up. It went parabolic, and then it's in pullback now. So what I'd say is, I would. So the daily looks good on a pullback. The weekly looks good on a pullback too. The thing is, you
got a downslope.
Yeah, you got a bull flag. You definitely got a bull flag going on here, weekly. But if you buy in here, right, then we're going to be subject to maybe a potential channel trader,
right,
before it breaks for good. So let's see how this week pans out. If we get an inside couple of 2-3 weeks, like an
Mhm.
inside bar, digest this big long. So the range on this is 6 points. So if we can get a couple of weekly inside candles inside of this, then a breakout. That's when you take us. I mean, next week it could rock to new highs. The problem is you got nothing. There's thin air holding it up.
Right.
You know what I mean? That's the only problem. So there's another gentleman here. The only thing is it looks like here's another. Okay, so these are all people showing up now. Well, two. So what I'd be doing is I guess let me just see something. That's
Maybe
the way to get them here.
You have to let them in.
You see them, right?
I don't. No.
Okay.
Nope. I don't see anything.
That's okay. I thought you could see down below. So you just see where the chart ends, basically. Below that is I can see who's showing up. I just want to see if they're going to be able to type in the room and if they can hear us.
I'm guessing no.
TJ reposted this to about, I don't know, he's got 20,000 members, subscribers. And a lot of people seemed interested in showing up to talk about charts, but there's definitely not a lot of people.
Arthur just came on.
Oh, hey Arthur, how you doing? Hey, good. All right, good. So you don't have audio because you're not in the show. Okay, I got you. All right, nice to meet you, Arthur. All right, so can you see my friend and guest Frank? Great. So Frank is a friend of mine, good friend of mine. He's in my Discord. He's a seasoned trader as well. He's got, what do you have, Frank? 20, 30 years under your belt? 40?
I started in 1979.
All right, so Frank's got me by a few years. Okay, we're not giving away any ages here, but Frank's got me by a few years, and I thought I was the oldest one in the with the longest time under the belt in the markets. But so Frank's been around probably 20 years before me, almost 20, 19 or so, and a lot of experience as well. And he sits in my Discord, and he's a great trader. So he's with me to talk a little bit as we wait for some more guests. But while we're waiting, Arthur, let's take a look at one of your stocks. You had wanted to talk about, I think, PLTR, right? And let me go to the daily while we get set up here. And I'm going to remove all this previous drawing sets so we can start with a fresh slate. You didn't want PLTR, Arthur? NVIDIA. Okay, let's go to NVIDIA. All right. And I'm just going to erase this stuff here. All right. Actually, let me clear everything. All right. So NVIDIA, as you know, I mean, it doesn't take more than two eyes to see what happened here, right? We went from a low of 86 when this whole market was looking like we were going to go to hell, right? Possible double bottom bullish. Well, let me zoom out to see where you're talking about a double bottom, and let me just add some time onto this because right now it's a 1 year. Let me go to 4 years. I mean, I think I see what you're talking about, but let me just zoom out a little bit. If you're talking about this area here, and then this area here, that really doesn't constitute a double bottom, and I'll tell you why. The time span in between these 2 points is what, 2, 4, 6, 8, about 10 months. You don't typically get a 10, on a monthly, right, or on a weekly, more so on a monthly. On a monthly, you might be able to call this like a double bottom because you have, a month is a lot of time frame. When you have this far of a gap in between two areas that kind of show that look like a bottoming turnaround, like this was probably October, so this was the August lows of last year. It's not really a double bottom because if you look back where we were, right, the price shot up from here, came down. This wouldn't be really construed as a double bottom. What I'm seeing is really a monster shoulder here, monster head, and the potential for another shoulder forming here. You know what? Let me see if this drawing tool works. I don't think it does, because when I've tried to use the drawing tool in the past, it didn't work. But let's see. It does. Okay, you guys can see that?
Yep.
All right. So to me, I'm seeing, a little bit of a head and shoulders. But again, this is on the daily, and head and shoulders don't always really work, right? Sometimes when they fail is when you get the big move up. When a head and shoulders pattern, any type of pattern that you're recognizing fails, you tend to get a major vicious move in the opposite direction. Now, this is what I'm seeing forming, but no double bottom really. And when we get to the more current trading area here, this is definitely a bottom, right? This was the bottom. We had a gap down, strong volume, thrust higher. So you don't really need a double bottom, but you do have a bottom here. This was a bottoming candle. And I know I'm showing bars, right? 'Cause I grew up on bars. But if I change it over to candles, okay, you definitely have a bottoming action here. But this was definitely not a hammer. You just basically had just a bullish gap down, and then it just reversed and went straight up since. But you have a bottom here, right? You have a new trend in place. Here's your uptrend, right? And you have what looks to be the breaking of its current downtrend just in the last couple of days. So this area here, these last 4 days, is when it broke the downtrend, Arthur. So now you've got a confirmed uptrend by not only by showing about 3 or 4 touch points on this uptrend line, but you've got a break of the diagonal resistance trend line. Okay, that's major. This is the reason why you got 2 strong days afterward and 2 gaps, because anybody that watches charts when they saw that it broke and closed above the trend line, for them it's all in. All the cards, all the chips were pushed into the middle of the table, and they're all in. Now, the problem is it's up in thin air. It's like in the middle of nowhere, right? So now it's either going to keep going to the next area of resistance, which is about this area here, which I get in this market, man, anything could happen. This market is so crazy right now. My thinking though is it's probably going to spend a little bit of time in the next few days. It has to come down a little bit. It's got to calm down a little bit. It's probably going to drift a little bit lower and get to this trend line here. From here, if you're a bull, you want to see it hold and start back up. If you're a bear, right? Or not bearish, but if you're short and you're looking for this thing to come back so you can cover, you're looking for it to come back like this, fail this trend line, this uptrend line, and maybe it's too soon, let's say too early for that strong of a trend line, and come back to this now trend line, and this could serve as support as it moves back up. Okay, Arthur? Now, Arthur, if you don't mind, what is your position? Are you long, short, wanting to get in and missed it? But these are 2 possible scenarios. I mean, I don't see a third scenario where price just comes. Actually, let me erase that and start with a red. I don't see price doing a complete failure, because right now all the tariff issues seem to be behind us. We've got deals left and right. NVIDIA is traveling around the world with Trump. I don't see NVIDIA, doing one of these, right? I don't see that happening. So it's going to be something along these 2 lines, I believe. And if you're a bull, you have two long and 1 short. Okay, so you did a zebra. That's what it's called, right? The zebra. You did a zebra trade. You have 2 long calls, and then you sold 1 short. Not short, but you sold 1. So you have a credit. You have a debit spread, and then you have just a long naked call. So he says that clears it up. And keep in mind, I'm still a rookie when it comes to chart. Oh, okay, yeah. That's fine, Arthur. Yeah, Frank is a very skilled charter too, so he's able to probably follow along exactly what we're talking about here. But by all means, I don't think it's going to fall out of the sky. I think you're going to get one of these two different scenarios. The market's on a tear; it's due for a pullback. I just don't see Nvidia giving it all up and then dying. Dying out here. Not with all the good news. Oh, you have two leaps and then a short call. Okay. Is your short call underwater right now? Because I would think a lot of people that were either selling covered calls or even naked calls are feeling the heat because it has just ripped. It has ripped like you can't believe. Anyone who short this stock, 5% up. Okay, I'm not following what that means, but if you're up 5% of your position, well, you must be up more than that. Oh, maybe your leap is up 5%. Okay, maybe your leap is up 5%. Good. If that's the case, then you're doing something right. And we have another guest. Anand is here. Hi, Anand. We're just talking about Nvidia here, Anand. If you're just getting in, it's one of the chart requests from Arthur. Arthur, what was another symbol that you had? I mean, hey, you know what? Before we do that, Frank, do you agree here? What do you think?
Yeah,
because Frank is on the cutting edge of all the news and all the tariff information. He's staying on top of all this stuff, and he knows better than me probably on what the latest developments are especially with these chips in Nvidia and all stuff. What do you think, Frank? Do you think that there could be a scenario where Nvidia falls out and just breaks these trend lines now and falls back into a downtrend?
I would tell you that given the current market conditions where the market's all over the place, it's tough to pick a direction on any given day. It really is. Nvidia, I doubt highly it's going to fall out of bed and drop like your red line here shows. I mean, that just seems beyond comprehension. Whether it's going to continue up or not in the short term, that's a big if, in my opinion. I think a lot of it's going to have to do with where the market sees events happening on a day by day and week by week basis, as far as the tariffs and other political kinds of things that are taking place.
Yeah, I agree. I think it is a day by day type of situation. The good thing is, especially for the market, and that's why it's ripping, is that Trump has been through pretty much all of that area there. I forget the area you call it. Not near Saudi Arabia, the UAE, United Arab Emirates. I think he even met with the Syrians. So he's making all these kind of deals, and it's going to involve a lot of the big names that we trade, the mags, in some way, shape, or form, I believe, and Boeing, right, and some of our defense contractors. So a lot of companies will be affected positively by what's going on, regardless of what happens with the tariffs. All the new deals that he's signing are going to it's really what the market's trading on. Good deal after good deal, from what it sounds like. So that's Nvidia. All right, Arthur, I'll come back to you. Did you have a chart that you wanted to see, Anand? And then we'll come back to Arthur for a second chart request. Oh, it's Anand. Okay, it's you with the PLTR. I thought that was Arthur. Okay, let's take a look at PLTR. Okay, I have to erase all that. So here's PLTR, and again, another screamer, right? I mean, geez. Down from 60, almost 60, so it came down to about 65, 66. It's doubled. It's doubled from the lows. It's absurd. Now, the pattern here is beautiful. And that's the thing with charts. When you're doing this for a while, you start to pick things right up and stuff, and you can see we had a little bit of cup here, we had a little bit of a head here, so you can call this actually a shoulder, then the head, and a little baby shoulder here until it rocketed up. Now it didn't get through this horizontal. Let me erase that. Let me get more professional here. It didn't get through. Okay, this neckline, we call it. Okay, it did not get through here yet. It did. I'm sorry, it did, but it didn't keep running. It pulled back right to it. So we've broken through what's called the neckline, and we've got. You know what? Let me back up. to be honest with you, this is really the neckline. Okay, on a head and shoulders, here's your shoulder, here's your head, here's your shoulder. It broke through the neckline. What I'm misspeaking about is it hasn't been able to take out the previous all-time highs until 2-3 days ago when it did break through, and now it's resting on support. So this chart is looking like it's going to just scream higher. Definitely looking like it wants to scream higher. Now it's overbought too, like almost everything else. So what's going to happen in between now and when it's ready to break out is you would hope a little bit more basing. The longer it goes, well, you don't want it to go too long, but another couple of days to a week of just sideways before the buying pressure takes over, and then that allows it to keep moving up. Now, if you break back through this trend line, okay, now which you had, you just took it out on the second attempt, because this attempt didn't make it through. It came back down to the moving averages. It got enough energy back up to break through, which it did, on some decent volume too. Decent volume over here when it broke through. So that's a nice sign. Now it's going to do its consolidation phase along the trend line, hopefully. It could come down below it just a little bit. As long as it regains it, stays above it, and then you'll get your breakout. Now, you have a June 13th, 120 covered call. That's underwater. You're definitely underwater, yeah. When do you roll it? First of all, so do you have 100 shares and one covered call? So if you have 100 shares and one covered call, you're afraid of losing the shares, right? So you can do one of two things. You can buy, if you have the account, enough in your account, you can buy another 100 shares right now. You got 5 covered calls. So you got 500 shares and 5 covered calls. Okay. So you can either buy another 500 shares here if your account can handle that. If not, you can buy, let's say, 5 leaps. Okay, that might save you a little bit of money and get you so you'll stay long in case you lose your shares at 120. It's a little premature to roll now, only because if you roll now and then it goes up another 20 points, you might not. You're being the same position in a sense. So why roll it now when, to be honest, anything could happen, right? This could pull back, break this horizontal that it just broke through. It could come down, okay, and spend a little bit of time under. Sorry, one of my cats is trying to get some attention here, and do a little bit more time, backing and filling. Maybe even come down here and do a double bottom, okay, and do one of these. So if you roll now, you're not allowing yourself to be able to maybe close it before June comes, before your expiration comes, if the price does this. So it's definitely too soon. It isn't like the price gapped up on you to 140 and now you're looking at still a month to go and you're 20 points underwater. Then I'd say roll it out six months. But for now, you do have a lot of time. You got about 4 weeks to go. May, June, you got 4 weeks to go, and anything could happen. There's no guarantee it's going to stay up here and take off. That was the best case scenario. You could have a pullback because the market's a little bit overbought, right? So you get a little bit of this kind of action where it doesn't turn into a downtrend. Okay, you can keep your uptrend, if you can see what I'm talking about here, right? Here's your new uptrend. If it comes down to here, you're still in a good position as far as long. It's still a bull trend. It's in an uptrend, but it would allow you to now close those covered calls or let them expire, whichever happens. Whatever is best for you in this situation. But if this comes down like this will allow you to close it instead of rolling it now and jumping the gun. One thing people do too many times is overmanage their positions. I think Frank will vouch that a lot of times in our Discord, there are, what people wondering, hey, should we do this? Should we do that? And the best thing to do sometimes is just do nothing. Just do nothing. You put your position on, give it some time, let theta work, let the reversion to the mean type of price action happen. What I mean by that is, nothing goes up forever and nothing goes down forever, right? So we've just come from almost 60 to 130, let's say. I'm rounding off. That needs a little bit of a rest, right? Imagine, imagine running 100 miles. You need a break, right? So I believe a break is going to come. I don't know when, maybe next week, maybe tomorrow. And then, you'll start to get this back and fill, and it'll come down and it will maybe test the 200-day moving average again. By now, the 50-day moving average is probably going to do something like this, where it starts to, not fall, but starts to just ebb a little bit, come down like this. as it meets and greets the 200-day coming like this. So you might get the ability to let this just expire, or you can close it. Should I do an in the money cash secured put instead of buying it outright? You could do that, but right now it's kind of premature. I'd say if you don't get any price relief and this thing starts to move up against you, then if you get to, let's say, 130, 130 in the next couple of days, okay, and then you get a small pullback, just a small pullback, then you can sell some in the money puts to try to get long. Yeah, that's a good idea, but I wouldn't do it yet, because you might be selling cash secured puts at 115, 120, and price comes down all the way back down to 97 to 100, and then you could just roll those out and down, if things work good for you. But if it pulls back quick, and now you sold a 115, and now you're going to be rolling a 115 down once a week to try to get it down, it could be like a little bit, you shot yourself in the foot by over trading. You know what I'm saying? I'd wait it out on, if it were me, I'd wait it out on selling the in the money cash secured. But if the time is right, when the time is right, if the price doesn't come down for you, that would be a good way to get your shares back.
Hey, Jim.
Yeah.
Another reason I would think is, and you and I haven't talked about this before, prior to this, but the S&P, SPY, hitting the 590 resistance. I think it's a pretty strong resistance level. And, although it's cracked through it, it hasn't cracked through it substantially at this point.
I agree. Now, this is some previous markings I have in my chart, and I can't erase these because I do look at the SPY every day, and it is like a holy grail for me, because I have all this history on it. Now, this dotted line is a trend line from a long time ago, which you can see it broke here, and once it broke down here, it never made it back to it until now. And like Frank's saying, I believe this is maybe the area you're talking about.
Yep.
Yeah, it coincides with that area right there, 590. And there it is. That trend line is real, and it's got history. I don't know if I can really come back to show you where it comes from. Yeah, it's actually a type of a trend line that you take from a high peak, and you extend the potential for where it could go on the upside. And trend lines stay in play. Some people think trend lines they start and they end. I extend my trend lines because they come back into play in the future at times. And as you can see right here, this is an old trend line coming back into play right now, and it coincides with what Frank's saying at 590. Now, again, though, the craziness of this market is every time it should have stopped at trend lines, it just hasn't. Even the 50-day moving average was like going through butter, gapped right through it, went up for a day or two, pulled back. The 50-day moving average cradled it like a baby, and then boom, more. And this trend line gapped right through it. This is an animal. This market is an animal. It's not stopping on in any areas that are supposed to stop it or hold. It's holding it. Yeah, it's definitely holding it on the long side when it comes to doing a pullback, but it's not stopping it on the upside. Now, if tomorrow we get another gap up, I don't know what to tell you. I mean, really, the shorts are screaming right now. Anybody who short this market is absolutely screaming their brains out because they're getting lit up, just like all the longs got lit up on the downside. And that's the thing with the market, right? The market will definitely take money out of everyone's pocket, the bulls, the bears, and the pigs. It will take your money if you're not nimble and if you hesitate. Now, you got to admit, there were some times I probably should have closed a position or two when things were coming down, but it was really hard to gauge on, how impactful the tariffs could be. And even though in hindsight we're finding out that the tariffs were kind of like a ploy to get China to talk to us and get better deals with China, and we are going to restructure and reset our tariffs with other countries, but it kind of was, the bazooka that Trump brought to the table to get things in action. And what it did is it spooked the market. So now that the spook is gone, you don't know where this market can go because there are a lot of people short. There's a lot of hedge funds, not mutual funds, but hedge funds short. Mutual funds got out. Now they're getting back in. Large traders got out. Now they're getting back in. Retail traders like us, we got out, or they never get out, but now they're going to get out at when some of these stocks and ETFs get back up to their break-even prices. So you got a lot of forces in the market right now, and there's no telling what it could do. Like I wouldn't doubt we open up down 200 points tomorrow morning, 300 points. But by the same token, I wouldn't doubt that we gap up 100 points, on the futures. So it's really hard to tell. You got to just protect yourself as best you can. If you've been sitting in something and it's coming back for you now, just get out, get to the sidelines. You can always get back in. What do I think of short strangles? I love short strangles. I love short strangles. It's one of my favorite and go-to strategies. I know it does require a lot of buying power. So sometimes our traders will turn them into iron condors instead, which is one of the things that Frank does. He knows how to turn them into iron condors on his own. He knows how to do all these different strategies. But I love strangles. They do require a lot of buying power, though, and they're actually easier and better to manage than an iron condor, because you don't have the drag of that long option. When you have that long option, you can't close each side as fast as you would normally close if it's a naked position. You agree that it's topping out. How are you hedging? Right now, I'm not hedging right now. Right now, there's, to be honest with you, I believe the downside, the worst of the downside is in, right? I mean, we're not going down any longer. If you want to hedge your portfolios, on stock specifics, I would go with your largest and biggest exposure position, and then hedge just according to that position. So if you've got $50,000 in one stock, so then buy enough protection to protect that one position. You don't need to protect your whole position if you have 100 shares of this, 100 shares of that. You can always, if you get caught in a position where you have 100 shares of a $100 stock, it's $10,000. If it goes down to a certain point, you can just do the covered strangle strategy where you sell puts and covered calls. If you have a decent size account, you can average down. You can dollar cost average a little bit. I think the time to hedge was right when that tariff situation got going. And we did have a couple of hedges on in my Discord, but we were a little bit early. We had hedges that expired in February. We had bought VIX call spreads, and they expired. And I think it was 2 weeks later, the mayhem hit, and I didn't put any more hedges on. I don't know if Frank did or anybody else did.
No.
No.
And
no one knew how low we were going to go, right? And then no one knew how far we're going to bounce. So hedging is something a lot of people like to talk about, and it's like insurance, right? You're spending money to protect your account, and if it doesn't come to fruition, yeah, it's a business expense, I guess you could say, but it's also sometimes an unnecessary expense. If you want to hedge your portfolio, a lot of times I just recommend lightening up your positions, and you can always add that position back on. So if you got 1,000 shares of a stock and you want to hedge yourself, why spend 1,000 or 2 in protecting? Just close out half your position, right? And then if you see that the markets or that stock does not fall, it keeps going sideways to up, just get back in. At least you took half your risk off the table, and you didn't spend money that then you start to get regrets and anger over that type of a thing.
Yeah, I think a conservative approach is absolutely warranted in a market that like we're facing right now. It's a very difficult market to know one day to the next what's going, where the market's heading, and for that reason alone, being a little bit more conservative, or a lot more conservative in some cases, depending on how much your stock has gone up, might be the best approach. Because as Jim said, you can always get back in.
Yeah, that's the beauty, right? So the market's there, set 5 days a week, and if you do futures, 6 days a week, it's almost 7. But you can always get back in. And why? Again, if you're managing a multi-million-dollar portfolio, maybe it's a different story. If you're managing an average portfolio like you and I, probably like you, I, and Frank, we all have, you want to hedge a little bit, to go a little bit lighter with your positions, buy some puts on the major indexes, because that will drag your stock down. So you don't even have to, let's say, buy a stock specific. You can buy a put, or put credit, put debit spread on, let's say, the SPYs or the Qs. So if you have let's say you have a high beta stock, which is most likely a tech stock, which would be more affected by the QQQs. You can buy a put or a put spread, or you can buy a butterfly, make it even cheaper for yourself, where you spend a little bit of money to make a lot of money in case it does fall. The only thing with a butterfly is you almost have to have it pinpointed on where it would land when it falls, because that's where you're going to be selling the majority of the short strikes. It gets a little tricky when you really begin to look at your portfolio and hedging it. Some of the best pros I've learned and watched them talk about it. You really just take your max exposure. So if you really have a lot of naked puts, okay, or if you have like I said, a stock position with a lot of shares, just hedge for those naked puts, or hedge for that one or two large positions in your account. Because anything else you can weather. 100 shares of this, 200 shares of that, you can usually weather that. It's when you have 1,000 or 5,000, 10,000 shares of something, you want to protect. You want to protect that and spend maybe a little bit of money on that hedge. But don't spend more than you have to, because most of the times hedges expire worthless. It's just money out the window. The 10-year Treasury is pushing 4.5, so the stock market, yeah, that's a good point, Anand. Yeah, so we do have Treasuries going up. Is it TNX? I think it's TNX.
TLT.
Yeah, this is a 10-year note. But does this give you the? It just doesn't give you the rates. Well, here's the thing, right? So when the bonds go down, the yield goes up. Now so now today we were up a little bit on the TLT, like Frank just said. So I guess the yields maybe came down just a little bit today. I don't know how sensitive they really are.
Yeah, yields I think were up a little bit.
Yeah, isn't that crazy?
It's an inverse relationship. As yields go up, the bond prices come down. TLT comes down.
Right. Think about that. So today TLT was up and yields were up. This should be where TLT is up and yields go down, right? Isn't that weird?
Yep.
Yeah. So today was kind of like a weird day in the bond market, where you kind of had it's almost like when the stock market's up and the VIX is up in the same day. It's like, wait a second, that's not supposed to happen. But yeah, bonds falling, yields were up, and then now if bonds begin to rebound, but I think Trump wants yields down, right? He wants interest rates down, because he wants to be able to repay the U.S. debt at lower interest rates, which would need bonds to rise. So he needs maybe TLT to rise, but they've been selling bonds. I mean, look where bonds were over here, right? Bonds were at 94, TLT 94, dropped all the way down to 84. That's huge. That's a big move in what, 5, 6, 7 days trading. 6 trading days, it dropped huge.
Right. I've seen some people calling for 81 on the downside.
Really?
Yeah.
So now think of that. If they fall to 81, the interest rates will rise. Now we know that the Fed wants interest rates probably lower. He just won't lower them yet. They want interest rates down. So I wonder what the forces at work here is above my pay grade. But I know the Chinese have been selling bonds and buying gold. So how that all ties into things, I don't know. But I think they are the ones who were selling the bonds, driving up the interest rates. I don't know how high the interest rates did go up. Again, I'm not a scholar with bonds, but I would think on this move down here in bonds, rates went up.
Mm-hmm.
And then
also keep in mind that with the tariffs, although they've dropped them significantly from where they are, there's a 10% tariff on everybody around the world on just about everything that's getting imported. And there's a 30% tariff on the China goods, which is significantly higher than it was. So,
True.
There's a pretty heavy weight for inflation here.
Good point, Frank. Yep. All good stuff there. And that's going to come in, so the market right now is, I think, reacting to the tariff issue blowing over and the deals being signed. Once Trump is back from his trip, which is coming up, I think he's going to be back over the weekend, there'll be no more, press and publicity on the news and TV wires on the streaming on, live streaming of him signing deals. So I think that's when we're going to see a cool off in the market a little bit, and we're going to get that pullback that we've been waiting for. Because unless more good news starts to show up, what's going to keep it from, what's going to keep the motors running, if you know what I'm saying. We need a little bit of pullback to re up on the gas pedal and get some sideways action and a little bit of a pullback. Anand, they went down today. They went from 4.5 to 4.45. Okay, that makes sense in the sense that we had a little bit of an update, just a small update on TLT, and to see the rates drop just maybe 5 basis points. Is that what it is? 5 basis points?
Yep.
Yeah. Okay.
Yep.
Arthur, did you have another chart you wanted to look at? Arthur has a couple of charts. Okay. So let's take one at a time. Let's go with XYZ, and then we'll go back to Frank for a chart because I think Frank has some interesting charts. Frank does a lot of research, and Frank and I were talking about something he was looking at. We'll go over that chart in a minute. Let's look at this. Let me erase all this stuff here. Again, I've been looking at this for some reason in the past with somebody, or maybe myself. So XYZ used to be called Square, SQ. They're in the same business as PayPal, and I think it's AFRM, a firm. I think it's a firm. So another one that bottomed out here on a gap down on earnings. So they reported earnings, and they must have been bad. I didn't follow this one for earnings, but whatever the earnings, however terrible they were, again, this market is rising all ships. This tide is rising all ships. So it's pulled right back to where you can see is the horizontal resistance. Anywhere in this range here, which it kind of broke a little bit through. Anywhere between there and here, you've got horizontal resistance. You got the 50-day moving average, which it did successfully get over and then come back and pull back right to it. That's a good sign. It's a good sign that it came screaming right up through the 50-day and kind of got held up by that first horizontal resistance line. And now it's going to have to deal with that second horizontal resistance line. And then you got the 200-day moving average right above. So you got some more headwinds, but you have good things that are happening. It got right back through the 50-day, and it's holding it for now. Ideally, you're going to want to see a little bit of a pullback like this. Okay, not come all the way down in here. Keep a higher high, which would create a new trend line. Let me fix that. Let me be more professional. Get a new trend line like this. Okay, but in the meantime, you'll have this support trend line. You'll have a higher high. A higher low, and then you can build off of that to come up to this trend line, get through it, get to this one, and then build up some energy and break through. All the while, though, you're going to have this 200-day moving average heading for it. And then if you do get across through that 200, now you've got a couple things. You're going to have probably a break of this horizontal resistance line here and a break of the 200-day moving average. So if you're long, it's looking good, but just know if you come back down and break this uptrend line, which is looking like it might want to create as it trade sideways to a small pullback, if it breaks it, okay, and comes down, then if you're long, you might want to, lighten up, get out. You can always get back in, but maybe get out and see if it can get back over it. Okay, you go with that, Arthur? Okay, let's take a look at Frank's, because Frank has an interesting story to talk about with this SMR. We just did a little bit of charting on it before. We just looked at what it's doing on the daily chart. It's in a price channel. It's in a let me scroll back and out. So it's not you could call this a bull flag, but it's a little bit long in the tooth. Okay, a real bull flag. I shouldn't say a real bull flag. A bull flag that you would want to trade off of. You don't. This is too long of a period of trading for so long before it can break out. Now, I'm not saying this can't be that time that it does break out and keep going, right? The ideal thing would be, let's say it breaks out tomorrow and then spends all of next week just bouncing around and trading along this trend line, gaining some more momentum so it can move up. You do run the risk that it just kind of runs out of gas and falls back down to the 250-day moving averages, which are right here, before it gets its juice to get started again. And I do think if it doesn't hold up in this area, this will be what it does. It'll pull back to these moving averages, which I would think it's going to hold it up because you've got a strong move up. You've got consolidation horizontally. You know, it's in a descending channel, but it's still a bull channel. And you've got some good volume kicking in today. In the last 3 days. The problem is on the RSI, you're a little bit overbought. So you've got a little bit of an overbought situation here. So the ideal one would be this one here. Okay, that we get the pullback soon. You know, this way you don't even have to do a false breakout. Because if you break out here, you're going to get all the breakout traders getting in. Then the minute you come back down and through this, they're getting out. So you're going to have sellers. You know, you don't want sellers at this point here. You want it to just pull back a little bit on its own, let some of the profit takers get out, and then resume up. That's the ideal way for this particular pattern to trade. Now, Frank knows a lot about this company, so I'll let Frank talk for a minute or two. And hey, talk about what you know about this stock, Frank, because this one could be a big winner this year, right?
Yeah. SMRs in the small model reactors for nuclear reactors. And basically, they're building nuclear reactors the size of a school bus. And, you know, they're moving ahead thanks to Trump's policies toward freeing the political and legislative stuff up to make it easier for these guys who are doing nuclear development, nuclear power plant development, to actually go forward with the plans and start to implement them. Especially given the shortage of electricity that they're calling for, based upon the needs for new data centers all over the country, AI driven mostly. But so the SMRs in that business, they are probably one of the leading companies, as you can tell by the significant jump in their price recently. So, you know, I don't have, you know, tremendous depth of knowledge in SMR's business, but I do have an understanding that the technology itself is definitely in demand. They're moving forward, hopefully, at a quicker pace than they were previously, and that ultimately is going to show up in their price. Now, that doesn't control things in the short term. That's more of a long-term perspective, but I was very encouraged when I looked at the weekly charts on this stock, because although it's had a significant move on a daily basis, on the weekly charts, it's still showing some upside potential. Whether it delivers or not, that's a separate issue. When I looked at this for myself today as a trade, I was looking at the 18 put and the 25 call for a long strangle on it. Trying to play, I guess, both sides of the market. If it does go up, hopefully be in the money. If it does drop down, I'd also be in the money. So I didn't take it. I spoke with Jim before making the trade, and he kind of convinced me that hold off a little bit and see what's going to transpire over the next day or two.
Yeah. You have a good chart set up here, Frank. You have a good reasoning for a basis for it to make its move. I mean, anything that Trump is trying to do right now that is going to affect an industry is going to be huge. And here's the top 10 of the options trades on it today, and I'm just trying to see what kind of jumps out at me. I mean, these are sizable trades. I mean, anytime you talk about hundreds and maybe 500. Contracts, they're sizable trades. You have some May 19 sells. Okay, that's nice. And that's, if we just do the math on one of them, 421 contracts just to see how much this particular trader spent. 421.
700.
Yeah, okay, so let's take the whole thing. Yeah, take 700 times average cost of, he paid 20 cents. So $20. So that's actually, it looks huge, and it's a nice size, right? It's a 14,000 share position, these two here. I guess we could have added that one in. So if we add that one in, so let's just do it. 421 276, and then 154.
Down
850, right? Times $20 each. So we spent $17,020. That's a $17,000 position. It's a lot. It's more than you and I would put on, guys, right? But it's not huge. It's not like it's a $500,000 trade. Now let's take a look at this one. This one occurred at, okay, actually these two occurred at the same time. So this was a roll. Actually, this was a roll. Here's what he did. He rolled this. He went from a 22 call to a 23 call. He rolled it from this week up to 23s. So we probably these were probably covered calls. These were probably covered calls on probably a large position, okay, that he rolled. So he bought back the 16 this week's at 20 because he's underwater. The price is at 24. He's underwater. So he bought these back, and he probably could only roll it up to 23, or he wanted to go one point at a time. He rolled it to 23, so he rolled it. That's what this is. So it's a roll. So this one really doesn't even count. This is not really a big player. This is more like a big player where someone comes in and says, "Hey, I want to be long this thing for the next week, and I want to buy some calls." He bought the 24 call. He bought 482 of them, and he spent 129 a piece. So he spent $62,178. Now here's a bigger player, and he's all long. Actually, he actually bought all these. He bought both of these trades because you could see same time, at the same exact time, this trade got broken up. Let's just see how many shares it was. How many contracts? 482 and 424.
900.
Yep, 906. He bought 906, and he paid average of let's call it $129.50. So he spent actually $117,000. So that's a large player, and that's a nice size trade. He believes it's going to be, well, it's already at 24, but he believes that it's going to be more than $24 plus what he paid. Well, then again, you know what? As options traders, we know that that's actually not true. That's a farce, right? So the way they teach you in textbooks is that, oh, well, for this trader to make money, yes, at expiration, he needs this thing to be 24 plus what he paid. But because we know that implied volatility changes as a price moves up higher and faster, which is what gamma is, he doesn't, all he needs is a fast move for him to be able to sell these for a nice size profit. Matter of fact, if this stock jumps in the next couple of days to 25, 26, he's probably got a double on his hand. Mm-hmm. So it's really a farce. It's fake news. It's fake news to say this has to move 24 plus $1.29. Not true, but by expiration, it is true. And like if he holds this till the expiration date, then he has to have 129.5. Let's say I'm averaging these two buys plus the 24. So he needs to 125.30. Let's say. But if he gets a nice quick move up, he can sell these for 25, 50%, 100% quickly. As Frank knows, because Frank trades long calls as well. We're mainly premium sellers in the Discord, but we do buy at times if it's the right setup and it's the right time for that. So yeah, you're welcome, Arthur. Yeah, but I think Frank's onto something here. I think Frank he's got a good company with. Again, I don't know the fundamentals on it, and I don't really need to. The chart tells the story. They're coming for this thing. You can see it in the price action. The problem is do you get in now or do you wait for a pullback? That's the only issue. And I'd have to say, I would like to wait for a little bit of a pullback, and I'd like to not see it break this just yet, because if it does, like I said, you're going to get a false breakout. You're going to get momentum traders in and then momentum traders out right when it breaks back through, and then you're going to have to digest their sells plus just the regular profit takers from down here. Don't forget, now there's some guys that are traders from long from here. They potentially haven't really sold yet. Maybe they sold a little bit here as it weighted by the 200-day moving average. But then when the new buyers came in and the shorts that thought it was going to roll over here and die, when they saw that it was going up, they all covered. So this is part of the short squeeze, long players. And so now the ideal thing would be just to have it pull back just a little bit now, because it did hit a trend line. Let's see it just pull back on its own. Don't suck in any momentum traders. Let it do something like this and then break out, pull back, and run. as it's pulling back is when you can be buying shares if you're a share trader, or when you get maybe closer to the 200-day moving average. Maybe Frank and will set some alerts, and we'll be selling some puts. Put an alert out to the Discord, and we'll be selling some puts right underneath it, or maybe right by this trend line here, this is a valid uptrend line, right around that area. Get some good premium as it goes up. Now, let me just take a look at the premiums. Are the premiums good, Frank?
They were pretty decent. If I was looking more at the long strangle.
Buying, yeah. So if we just look 30 days out, just quickly 30 days out, and I don't go by delta, but let's just look at a 20 delta. 20 delta is going to pay you about $1.33. All right, so it's about $1.33 on that. If you were going to try to sell that, yeah, $1.33. I'm just curious what the let me just see something.
One fly in the ointment with this, and it's actually a bullish case, is the short interest on it. The numbers obviously are a little delayed in getting for me to get them, but I think it was like 18+% short interest in this stock, which is pretty high.
That is pretty high. So if just going back on this thing, if we sold this for 133, it's going to use about what? I don't know. Hang on, let me see something here. How much is it going to use in buying power? 30 days out, 20 delta. That wasn't showing it to me there. It's going to use about, it's down. So this, I'm in a margin account. Using a margin account, it's only going to use $230. But if you're using a cash account, it's going to use $2,300. Well, if you sell, let's say if you're selling a 19 delta, a 19 strike, you're going to use $1,900 in buying power. So you'll call it $1,900, $2,000 in buying power, and bringing in how much was that?
133.
Yeah, 133 on 1,900 in buying power. That's 7% in almost 30 days. If you get full max profit on something like that, that's nice. Yeah, those are good premiums. Good premiums, Frank. And I'm just curious, what is the IV percentile is actually only 21. I would think it's higher than that because you're getting such a good premium.
I think the premium was probably driven over the last couple of days with the.
Yeah.
I think it came out with earnings. I think.
Did they have earnings? That's it.
They
did. Yep, that's what this rip up was from the last couple of days. They had earnings right here.
Yep.
Now, do they have dividend? And the next earnings are in August. So May, June, July, August. Yeah. So earnings are right of the way. The market liked their earnings. Price moved up, and you have now 3 to 4 months before the next earnings, and it could really spend some time moving higher as it tries to probably take out these all-time highs. So yeah, Frank, let's keep an eye on this one. Maybe get in on a pullback.
Yep.
Let's go to so Arthur, on PayPal and Square, they're XYZ. They're in the same business, as you probably know. The stronger of the two used to be, I think, PayPal years ago. Then Square took over, but this is kind of similar to the XYZ. PayPal is actually, PayPal is closer to to its 200-day moving average, which it can't get through just yet. But again, now you've got a run up from the bottom. What's nice on this one is it took out, just like Square did, is it took out this pivot. So it's a pivot which created a trend line. You got a trend line here, horizontal trend lines of resistance. It kind of broke through and just pulled back to it in the last, like today. So right now it's resting on this horizontal support because it once was resistance here, and here, gapped up above it, couldn't get to the 200-day, but pulled right back to that trend line. So right now it's support, but there's nothing to say that that's going to hold, because when the market does, we know the market's going to pull back, right? The market has to do a little bit of a pullback. I'm not saying fall, crash, a little bit of a pullback. Don't be surprised if this thing does pull back a little bit, to the moving averages, okay, which still would be a higher low, from these lows, okay? And it would be building a base which would create, what you have now here as another horizontal, it would be a new horizontal support line. This is what I would like to see if I was long this stock. And if you're looking to get long, you can wait maybe for a pullback into this area, or you can get long by selling some puts in this area and hoping to get assigned. That's how you can do that one. You know what? In honor of TJ, though, let's look at a couple of TJ's charts. He's got some big positions. I think he's got like 10,000 shares of Amazon. Let's take a look at Amazon, because we wouldn't be here tonight if it wasn't for TJ. TJ is out there trying to get people to come and tune in while he's away. So TJ's in this, and again, some of these, I'm seeing similar charts, man. I'm seeing a whole lot of similarities. Price fell. Obviously, we know it bounced from this low. We had a double bottom. Not a double bottom. We had a higher low. Pardon me, I'm getting tired. Higher low. So we've got a new uptrend support. We can actually take it a step further. We got another one here. We broke through this horizontal resistance. Okay, gapped up through it. Actually gapped up through the 200-day and horizontal resistance. Okay, for a couple 3 days it stayed above it. Today it closed right about on it again, and you got the 200-day moving average right there as support. So Amazon is looking like a long. I mean, all these charts are so bullish. That's why, to be honest, man, I don't see us falling again. I do see us maybe consolidating. Definitely maybe some consolidation. And, it wouldn't be a bad thing, again, if we get even something like this for Amazon, okay? And then it starts to come back up a little bit, sideways, come back up, like something like that. I don't see it turning into doom and gloom again. I just don't see this happening, right? I don't see that. What would cause that? I mean, I don't see any more war. If anything, wars are ending. Trump is trying to get the Ukraine war ended. He's trying to get I think he got the Indians and the Pakistanis to stop fighting. If not, that'll be his next. And again, this is not a Trump thing. I'm not pumping Trump, but I am saying he's working on these things to fix things. Where could the next reason for a fall be? I don't know, right? Maybe a recession, but I don't know, Frank, are we already in a recession?
Not yet, but we had a down quarter last quarter.
Right.
Two down quarters in a row is kind of the technical definition for a recession. Don't know if it's going to happen or not. The one thing I do know is, and this is an age-old marketing statement, nothing good happens under the 200-day moving average. And when you're looking at the stocks that we're looking at, the ones who are above the 200-day moving average are the tech stocks, the movers and the shakers, and they're not much above it. I was always of the opinion that when you break through a significant resistance level like the 200-day moving average, that you need to come back down at least to that average, play around like you were just pointing out on that last chart before continuing to move up. But in many cases, it just continues down because it was kind of a sucker's bet to jump in just because it broke the 200-day moving average.
Great point. Frank makes a great point. Now, nothing good happens under the 200-day. We know that for sure. That's a fact. And to Frank's point, there are a number of stocks who have not yet made it above. You got Apple, Microsoft did.
Yeah, if there's one that I would say that looks strong, Microsoft definitely is. One, if not the strongest, one of the strongest.
Yep. Google did not make it over. Microsoft has, and it's been on a ripping tear. It's almost at all-time highs. Mm-hmm. Tesla has not made it. I'm sorry, Tesla did make it. Tesla's at 342. Tesla made it over the 200. What are some of the other ones? I mean, NVIDIA just made it. AMD did not make it. AMD is not really a Mag 7 big name stock, but it's a chip. This son of a gun, AVGO, did make it. Some have, some haven't. The Qs, let's just take a look at the indexes for a second. The Qs are The SPY is, IWM is not.
Mm-hmm.
The diamonds, which is the proxy for the Dow Jones, that did not, but it's trying. It's trying its hardest today. It really tried to get over that 200-day, but it didn't. But as far as Amazon looks like it wants to go higher. Crazy. I mean, here's another one that TJ's in is Tesla. Now, let me just move everything here. These are some Fibonacci's that I had on the chart. I'll just move them over a little bit. So, looking at these Fibonacci's, we're taking them from this all-time high all the way down to the swing lows. And I was on with TJ a couple of weeks ago when we were talking, and I said, hey man, they had bad earnings, right? They're burning the buildings, but we've got an area where it's held three, four times, three. Like this is like a triple bottom. I didn't expect it to rip this fast, but I did think it was going to go sideways a little bit, and then really all the bad news was baked in. How worse could it get? You got a senator talking negative about the stock, people getting their cars scratched, keyed, and burnt, dealerships all the same. What else could happen? And the stock wasn't going any lower. So when that thing, again, I didn't take my own medicine. I should have been buying this thing. Look at it, right? 260 to 350. Come on. Now I know TJ's. He's got some short calls, so he's working those covered calls. I think he has covered calls and short calls. So he definitely needs a pullback for some of those calls to kind of drop the IV on him, and maybe he can roll them up and out. But by all means, this is a bullish looking chart. I mean, bottom. I don't see the bottom. I don't see them breaking through here. And when I was talking to him, we were talking about it. We had this reference point already known, and then we had these new reference points known. All that negative news, but yet there were some traders, and I think it was a big Reddit thing. The Reddit traders were trying to get this thing down to like 150. So there was a lot of traders buying the 150 puts, and they're all. We know where they are by now. They probably, they whatever they spent is going to be wasted money because they're not going to get paid. But for people like us and me, I got to say, I dropped the ball. I should have been long Tesla, and we should have been long in the Discord. But we didn't know. How do we know? We don't know. But yeah, we should have. When next time we see this type of thing happening, right? Especially when we have a reference point already, we got to just hold our nose and go long, sell puts, or buy calls, and just use dispensable money where you don't care if you lose it. A couple $100, maybe $1,000, and just put it into the position, whatever the name is. This type of a pattern is a bullish pattern, especially when there's so much negative news about it and it doesn't go any lower. But yeah, TJ's got a big position. I think he's got, I don't know, he's got a lot. But he has long shares, so he's got long shares, covered calls, and some naked calls. But he has naked puts too. He was doing a covered strangle, so he's gonna be all right. He just needs a pullback, and it's funny too because we're gonna note this in right here. So from the lows, it raced right up to the 23.6 Fibonacci. Okay, it came up to 38 where it spent a day or two just consolidating, and then it just ripped up to the 50% Fibonacci. Now, at this point, it's definitely going to get to that 61. It's just a matter of when. And then if it can't get through the 61 and then starts to do something like this, okay, we may have seen, let's say, the highs for the year or the short-term highs for Tesla until it consolidates again. But if we get through that 61, come back and base around it, okay, then the odds are, and I don't know what the odds are. It's greater than, like, say, 90%. Once you clear the 61 fib and hold it, you're going to get usually a 100% retracement to where you broke from your highs, which would be that, right around that 480 area. So for TJ, we want to see this pull back a little bit, come down a little bit, and he can maybe close those out, roll them up and out. But if it gets above that 61 and holds, it's looking like a run for the highs. And then, if you're a long and you're a bull, then great. But if you've been selling covered calls like most people that were underwater on Tesla, you're chasing your tail because you're trying to roll them up and out, and you just can't roll it up. Actually, you can maybe roll it out, but you have to roll it out so far in time that by the time it gets to that point, the price really could be $500. So it's a little bit of a touchy situation. All right, so there's two of TJ's stocks. Frank, you have any more you want to talk about?
Yeah, one that I've been looking at. Actually, I've got some money in it on the long side. UUP.
That's the dollar, right?
Yep.
Okay, so you're long the dollar, I would think, right?
Yep.
Okay. So again, these charts are all very similar where, it is a clear turnaround pivot point. Okay. On some good volume. And again, now we are talking about UUP. Now, there are not a lot of traders that trade this. And I say that only because it's not like it's a Mag 7. It doesn't have a lot of hoopla and glory and glitz and glamour to it. But for traders like Frank, who sees, let's say, a trade setting up, he's more interested in making that profit than being able to talk to family and friends about the latest symbol he's looking at. So UUP is not going to get a lot of attention. But if you're looking at the chart, I see why he's in it, because he's got a new established uptrend. Okay, the strong dollar, which is what I believe Trump wants, right? Don't we want a strong dollar?
Yep.
So that'll make American goods. It'll make. He wants the U.S. currency to stay the number one currency and not lose any footing there. So a strong dollar suits that need, and it's been beaten down, and now it's rebounding, and it came right up to the 50-day moving average. It's 50-day moving average where it did pull back from. But it's consolidating a little bit here, and it looks like it's going to respect this new uptrend line. So that's all looking good. Now, let's just take a look here for a second. Let's go. Okay, so I was eyeballing from this top area here to this first touch point. I wasn't looking even further down the line, but if you notice, this is a very valid trend line, which is going to be major resistance right now, because we have our touch point here, and then let me make that yellow. Here's your first touch point, which creates the trend line. Then we have the attempt here, which doesn't really make it because it wasn't strong enough yet. But now we have the strength in it where it was able to make it up to this descending trend line. Now the question is
can it make it through?
Yeah, can it make it through? Exactly. Can it make it through? And then let that now serve as support moving forward? Or does it pull back because it can't get through, and now it uses it as resistance as it tries and tries and tries? And there's nothing to say it doesn't get through here, although we did establish this new trend line here, like we just noted. So we want to see if it's going to do any pulling back. We don't really want to see it go beyond this. I guess it wouldn't be the end of the world if it did do that. That still would be considered a higher low. It just wouldn't be the higher low we were hoping for that would stay intact. But this actually would be a more sustainable trend. This angle here, which is a lower degree angle, is the lower degree angle, the more sustainable it is. Anytime you get these type of trend lines, the higher the steepness of it, the less able it's going to be to hold it when you do get a little bit of selling. So of all of them, the one that maybe creates this type of an angle would be the more solid one. So even if Frank sits in a little bit of a pullback until this new trend line, this new uptrend line, gets tested and holds, it wouldn't be the end of the world. Although I don't know what are your strikes, Frank? Are they close by?
I don't remember, to tell you the truth.
All right, but
yeah.
He might get a momentum follow through. Frank, this position that Frank's in, it could maybe take it out quickly, come back, pull back, and then move it forward. It really depends on some of the developments that we see in the next couple of days and weeks. But I'm just saying, even if it does pull back to here, as long as Frank went out far enough in time, those calls might still work for him, and he can check them when he has time to see if he has to maybe close those out and maybe go a little bit longer dated. But so far, so good. We have a bounce. We have a new established uptrend line. We'll see if that one holds. Be nice for Frank if it just pulls back right to here and bounces from here and just comes right back up like this. But yeah, UUP it looks definitely looking decent, and but it is butting up against the trend line right here. So we're going to see how it handles that one. All right. Is there a BOSPA? BOSPA, are you here? I don't know if I'm saying your name right. Let's see. Did you have any symbols you wanted to take a look at? If not, we can go right back to Arthur or Anand if you have any more. If Anand, are you still here? I'm not sure if BOSPA made it. Oh no, he's not. He looks like he's in the room, but he's not able to get connected. So let's take a look at another one of Arthur's. TGT. So let me just erase all this. All right, so TGT is in the retail sector. We all know that. Retail has been beaten and battered. I mean, the chart is just this one is just terrible looking. I mean, you know, from the time it was up here last year, 181, call it 182, it's down 100 points, almost 100 points, down to 87, and then it bounced from there. I mean, this is. I mean, Target's a good company. You know, it's a big box. It's not a big box. They do compete a little bit with, let's say, Costco, but they're not in the same category where they sell bulk items. But they definitely compete with Costco for customers. Because if you don't want to buy in bulk at Costco, you're probably going to shop at Target before you'll shop at Walmart. I'm not trying to get judgmental, but I think people that want to shop at a little bit of a higher end store go to Target than they would go to Walmart. And if they want to buy quantity, they go to Costco. So Target competes with them to some degree, but it's got nothing but downtrend lines. Although we do have a little bit of a penetration, but it's not a big penetration in the sense that it didn't do it with any volume to speak of when it kind of got through this here. So that's really a non-event. All it was trying to do was eke out a touch of the 50-day moving average, which it did. I know I'm moving away from those points. I wanted to zoom in a little bit. So let's zoom in, and we see that we do have a touch point on the 50-day moving average, which was a gap up to it. It tried to get through it on the second day and failed. Gap down because of all the pressure because it couldn't get through the 50-day. And then today was like an outside day, which, again, on really no volume. There's really no interest in this thing for the bulls. If anything, it's just biding time before something. It just feels like something is going to come out, and here it is. New earnings are coming out. They just had a dividend. That's what this was actually. So they had their dividend and the price dropped. That's what that was. So the dividend dropped the price, and then today it rebounded slightly. But you do have earnings coming out now. You know, some companies are abandoning giving guidance on their earnings because they don't want to put themselves in a bad spot with the tariff talks. Like Walmart just said that they're going to be passing along tariff costs to the public, but they don't know what the tariff costs are going to be yet. So it's kind of uncertain, right? So it's really a crapshoot. We trade earnings in the Discord heavily, but we've been laying off on some of these, especially the retailers, because we don't know what they're going to say and what they're going to claim for tariff implications. So I would say if you're in Target and you can get out before earnings, you might want to consider that, only because if they talk about tariffs and how they're potentially going to affect them, then it could go lower. I'm just trying to see where the support is. I mean, it's already broken. It's already broken some type of support that it had. Any little support it already had. And if you notice now, we didn't see this before, right? Because I didn't zoom out long enough. But the reasons why it gapped through here was because it was breaking through this support zone. So this support area here that it held last year, actually in 2023, Okay, it couldn't hold it in this most recent selling, and it gapped down. So you first have to get, if you're long, you have to get through the 50-day moving average. Then you have to get through hang on. Then you have to get through the horizontal resistance. So first and foremost, you got the 50-day moving average, you got the Bollinger Bands, and you have this horizontal resistance. If it gets through that, though, this could now serve as support once again. So this could be what's called, I forget, this is called an island gap. It's a gap where you have a gap here, let's say, and then if we get a gap up on earnings, it leaves a gap here and a gap here, and it gets above this trend line. It could be the reason why it gets back up above here, stays above here, now stays as support, and it starts to move higher. The question is it going to do that, or is it going to do one of these? So crapshoot. You're hoping it goes down after the earnings? Okay. You're hoping it goes down after earnings before 620. Okay, you might get that. But you might also get the opposite, because we don't know. If they say they don't really feel the tariffs are going to impact them greatly, and that it's clear sailing, this stock has been beaten down. So it really is a crapshoot. No, it's nothing you can buy, Arthur. My chart is just something I use from my trading platform that I use for my trading. It's called Thinkorswim. So Charles Schwab offers this. It's a free platform to use for trades and charts. So this is not something it's not like TradingView, where TradingView you can pay if you want to get the ability to do all this fancy, Fibonacci's. I'm using here a drawing tool, though. This is an outside source drawing tool. It's called what's it called? Screen Marker and Recorder. But this platform alone itself has its own drawing tools, a ton of them. I just like the one I'm using here. It's just a little bit easier right now. But this one, it has it built in. I can do similar stuff with just sorry, screwed that up. Just by doing something like this. So it has its drawing tools. But if you have to have an account with Schwab. Yeah, it's basically a gamble, Arthur. It is, because it could go either way. Depending on your situation, though, you can. Now, I don't want to use the word hedge. You can protect yourself. You can protect yourself depending on what your situation is. Like if you're long shares, or if you're just, if you're long shares and have covered calls sold, or whatever. Depending on what you have out there, you can get protected. Now, let me just say this. I'm not trying to push the Discord, but if you guys want to join my Discord, let me know. You can come in for a week free, get to know me and Frank a little bit, and see what we do. And if you want to stick around and stay after that, you can. But I can teach you stuff there, and we do. Any questions that people have, I always answer. Frank will vouch for me. Frank and I sometimes talk at 2 a.m, so I'm always usually around. And we got a great bunch of guys. I mean, you can see Frank's a great guy. He's very knowledgeable. We have a few other great traders in the room, but we're small. We're not a big group. We just have a nice, small, tight-knit group of guys and girls. There's a few women traders there, but we have, good heads on our shoulders. We're definitely not gamblers. We're not risk takers. Everything has to have, a reason and a setup. And for the most part, we're premium sellers. So we're on the selling side, but we do want to partake and make some high percentage gains. So we will go long here and there. Okay, Arthur. So Arthur, I'll send me a note on, let's say, Twitter, and then I'll send you a private. I think I can send you a private. I think I just had to send you a private link there. But I'll let you come on in and hang out and see how you like things. But yeah, Target, I like it. I like the name. Okay, I like it just like I like Walmart's name as far as to shopping. But Target is a little bit higher priced. But I do think if tariff stuff gets out of the way, I think a lot of these retail names are going to just come flying back. This will be one of them.
Hey, Jim.
Yeah.
Baspa asked for a DKNG.
Okay, let's do it. Thanks, Frank. Let me erase all this stuff. But yeah, Arthur, if you wanted to do, let's say, this marker, just Google it. It's called Screen Marker and Recorder. You got to have a certain number of, I think it's a Windows 10 or 11, and you can download this screen marker, and then you can annotate your own charts. So I'd like to join and check it out. Sure. Okay, no problem, boss. What's your situation with this DKNG? Are you long shares? Are you long calls? Are you short puts? What do you have going on here? Are you a big gambler? Do you use the app? I'll start doing the charting as you kind of let us know what you're doing with your position. But so DraftKings, we saw a major run up here. It made it all the way up to about 54, let's call it, and then just fell down with the market. It regained some of its composure. It's also now, it's got a couple things going on. One of the good things right off the bat, the MACD. The MACD is now crossing above the zero line. And the way I like to look at the MACD is whenever you've got a MACD coming above the zero line, which is what this purple line is, that generally coincides with the price getting over its own 50-day moving average. So when I do a quick glance at the MACD, I'm looking for that midline, zero line. If it's above it, great, you're above the 50-day moving average. If it's below, you're below the 50-day moving average. Now, the histogram, which is what these bars are, okay, this just shows you basically how the trend is starting to move. The longer these bars are, and they grow longer and longer as the trend stays in that same direction. So as you can see, the price has been moving up, so these bars are growing. So it shows that the trend is gaining a little bit of momentum. I'm not a big MACD guy, but when I do look at MACD, that's the two things I'm looking at. Are we looking at above or below the zero line, and how are these histograms looking? Is it going ascending, descending? Are they red? Are they green? It's green. That's good. Is it increasing? That's good. Another good thing is I do follow this TTM squeeze thing. This is a John Carter thing. He's got this indicator out. When you have a whole bunch of red dots, it indicates that we've got tight Bollinger Bands, as we have right here. You can see these red lines. I'm gonna highlight them. You can see the light up a little bit lighter. So these red lines are the Bollinger Bands. Whenever you get these Bollinger Bands real tight like this, you get a squeeze. And then when you break out of that squeeze, which it did, and it looks just like a little bit like the MACD here as these histograms start to go up, it means price is heading higher. So that's what we've got going on here on these indicators. Now the one little caveat is you've got the RSI not overbought, but getting there, and it looks like it's kind of self-correcting because it didn't really even get to overbought territory. It pulled back a little bit. Let me just erase this because I'm about to expand this. So let's zoom in. And then as we zoom in, we can see that the earnings are out of the way. Price had a kind of a muted move. I kind of call this it didn't rip up. It didn't rip down. It just kind of, earnings weren't terrible where the stock price fell, and they weren't great where the stock price is running up. But we do have a couple of good things. Number one, it is above the 50-day and holding. The bad news is it tried to get through the 200-day on a couple of attempts and couldn't, so it failed. So it's coming back down. You're going to want to see the 50-day moving average hold. You got the 21-day moving average right below. So you have a cluster. Right now you have a cluster of moving averages, all of the major ones, which is the 50 and the 200, and the shorter terms, the 8 and the 20, 8 EMA and the 21 EMA right there. So you're in a real critical zone. I think you're okay, and I think it's going to probably do like I've been talking about the others. It's going to bide some time now and do a little bit of side action, maybe a little bit of a head fake, and then right back up in a little bit, and it's going to probably drift higher, because if the economy doesn't falter, if people have more money in their pockets, if we get tax cuts, if we get more jobs, all stocks are going to keep going up. They're going to keep going up because their revenues are going to keep going up. So if you're long, just sell your covered calls. Just don't sell them too close. Okay, so you've been looking at a new cash you could put. You haven't sold any cash. Okay, so yeah, now's a good time. I mean, really, to be honest with you. And by the way, what we're talking about tonight is just ideas. We're not talking about financial advice. But sure, why not sell some cash you could put? Because you've got right now, you've got some sort of a uptrend going on. And you've got support of not only two trend lines, but you've got a cluster of moving averages. The news that could have driven it lower is out of the way. That's the earnings. So unless something, again, but that's the thing, right? So you never know when bad news is going to come. And I've heard people say that trading earnings is like the worst thing you can do because it could go anywhere, right? But so could a stock, because they could come out, any stock could come out with news. Look at UNH. Who would think that UNH is going to come out with all the negative news that's coming out, right? But that's binary events. Those are events you could never have planned for. But when you trade earnings, you can plan for that because you know when that earnings date's coming out. You know what the street's expecting. We know what the analysts are looking for. We know with the chart going into it, and we also have high implied volatility when we put that trade on, so we can sell our puts at the point where it's the highest implied volatility. When you get this news coming out like on CrowdStrike or like with UNH, you're caught flat-footed, and the minute the news hits, IV spikes. So now you're stuck. You're really bad in a bad position. So people like to poo-poo trading earnings. We trade them responsibly. Yeah, there are a couple that get away from us. I know unfortunately, Frank and I have been caught in a couple here and there. But for the most part, you can limit your risk and you can put the trade on with a higher odds of at least being able to make some type of a profit instead of just gambling. We take the gamble of it out. Yes, you're going to get stuck in a couple that just have outsized moves for just, crazy reasons. The news was so bad, the earnings were so good, it goes too far, too quickly, higher or lower, and you get stuck. You got to now be in it for 6 months, or sell out and get out because your account couldn't hold it. And that's happened to everyone. So, but for the most part, though, we take that risk out of the trade if we can. But I think you're good here. That was all said to say this. Earnings are out of the way. You got a good cluster of moving averages. You got uptrend lines. Sure. So I would, this may be something we're going to talk about in the trading room this week or next week. Maybe we'll sell some cash secured puts on DKNG because the chart looks good. And the premiums, from what I recall in the past, premiums aren't too bad. Let's take a look at them quickly just to see where the let's go 30 days out. Let's just let's not do weeklies. Let's just go 30 days out and take a quick look at. I like to use a reference point, 15 or 20 delta. Let's look at a 20 delta. This is SMR. Let me change it to DKNG. Again, looking at about 30 days out, 29 days to be exact. 20 delta. You're going to get about $1. Okay, and if you use a cash account, it's going to be what are we selling? A 31 put, so $3,100. So $101 on 3,100. So you're looking at about a 3.2% return on your money in 29 days at max profit. Again, if you close that at 50% profit in 2 weeks, you're still looking at about 1.5% in 2 weeks. That's 3% a month. If you did that twice in a month. So that's not bad. Those are not bad premiums. I just want to see what rank they're giving it. And that's what's funny though. And that's why I don't like Thinkorswim in comparison to Tasty Trade in this area. Tasty Trade will give this an IV rank, and they'll probably have it at like a 30 or a 40, I'm sure. But Thinkorswim only gives it a 17% IV percentile, which sounds low, but it's a decent premium for this thing. And I'm just looking at the calls and puts today. There were 24,000 calls. But see, that doesn't always tell you the story. When you look at that, sometimes you can't just look at how many calls and puts were done because it doesn't tell the story. So we saw a lot of calls there just listed, but 1,000 of them were sold. So somebody's selling 1,000 calls. Could be covered calls, could be someone selling short, naked calls, doing a strangle. It's not part of a spread because there's no condition. If it was a spread, it would be showing up over here as a spread. But someone sold 1,000 calls. So, it's not always where the calls are bought. So this is kind of a negative, if you want to call it that, but it's only 1,000 of 29,000. How many was it? 24,000. I liked it. Okay, yeah. New cash you have somebody. Yeah, no problem, Baspa. Yeah, you couldn't pull the trigger. Well, what's holding you back from pulling the trigger? Let's talk about psychology for a second. What's your greatest fear? By the way, are you a new trader at all, Baspa? Like, how many years under your belt do you have? Because in the beginning, when you're just learning, or you're just trying a new strategy, maybe you're selling premium. Oh, you found it today back up. But how long are you trading personally? If you don't mind me asking, I'm just curious. You trading a couple of years? You trading a couple of months? Okay. So yeah, so 7 months, I'd say he's probably still a little worried. And what if this goes down? So if it goes down a little bit, you can always roll it out and down, right? If the worst happens that it falls, you'll get assigned. Okay. So let me just erase all this. If this kind of happens like this, right? And you sold a put here, so you'll get assigned at maybe 34, 33, and then you'll sell covered calls against it until you can get out of it, profitably. Not now. Again, I say that like you can do this without issue. That's not always the case. There are issues sometimes when a stock keeps going down on you. Like, I'm not going to lie. We have a couple that where I'm nursing right now where they've gone down a little bit. They go down a little bit more. They go down a little bit more, and you're selling covered calls. But now you can't sell covered calls higher than your cost. You're selling covered calls below your cost, which is a little bit risky because you could get taken out at a price below what you actually paid for it. But there's ways to, remove that risk of it by not selling covered calls too close. You can sell covered strangles, which help you bring in more premium so you can lower your cost basis faster. But the worst thing that would happen to you is this. And if it does, you'll get assigned 100 shares. And then you can just do the wheel strategy that TJ talks about all the time. And that is to sell covered calls against your long shares. Okay, bringing in premium, lowering your cost basis on your shares. And then at some point, if price comes back to your break even, you can sell a covered call and get taken out for profits. So don't be worried about it, but just don't sell covered call cash secured puts too close to the strike price unless you want to get assigned. You follow? Does that make sense? Because the closer you sell your cash secured puts to current price, the more likely you're going to find that your position gets challenged, and then you're going to probably get assigned, or you're going to have to be proactive, and roll your position, to avoid getting the shares if you don't want them. Okay, good. I'm glad you understand how to do it. Good, and how to manage. I would say, yeah, why not? Why not sell some puts on this cash secured puts? Because, or at least sell one and test the waters. I wouldn't say go, big size, right? Sell one. If it seems like it's looking good and better, then whatever your comfort level is with your account size, you maybe sell another one or two, whatever your account can hold and handle, and how it helps you sleep at night. You got to be able to try to sleep at night. Even though I've spent a lot of sleepless nights, and Frank can vouch, he had some sleepless nights because when the market was falling, it was scary. But don't put yourself in a position where you have to lose sleep over it. That's what I recommend. Go small. You can't go wrong going small because you'll be making something, and then you'll be getting more experience under your belt. And you're welcome. No problem, Bosma. I hope I'm saying your name right. But yeah, I think the chart looks good. I mean, the bottom looks like it happened here on the market sell off. A little bit of nice improved volume on the selling on the turnaround. Okay, then you've got some more volume kicking in here to support this trend line right here. So it looks good. Oh, bass. Okay, are you a bass popper? Okay, bass. Good. Fishing is good. Fishing is a good outlet for traders, man. I think fishing and working with your hands and gardening, anything outside, man, when the market's kind of treating you poorly and badly, get out there and do something with your hands. It's always good. Or do something, read a book, anything that uses your mind and hands for something else. Okay, so you're a grandpa. Okay, good. And you like fishing. You like fishing for bass. Good for you, man. See that? Your name fits you then, Grandpa. Well, Frank's a grandpa, right, Frank?
Absolutely.
Good for you, man. Good for you. Must be the weekend fun for you, right? Sometimes.
Sometimes not so much.
Yeah. Well, when you're asked to do too much is when it becomes an issue.
Well, I always enjoy being near him, but he actually lives with me, so.
Oh, even better. Even better. You don't have to travel too far and drive him home when the fun is over. He just goes to his side of the house, or he or she. So, Frank, any more charts from you?
No. There's nothing that I can think of. Okay. I got to start wrapping it up here anyway. So
yeah, me too. It's been a long night, but I'm glad we had a couple of visitors. There was another one that I think Arthur had, TSM and
TSM.
AMD. Okay, let's look at TSM quick and we'll call it a night there because Arthur is still here. So TSM. And I have looked at this one with somebody, so let me just remove all this. Okay, and let's remove this. So just like a lot of the other semiconductors, I mean, just a rip roar. I mean, I hate to say it, but all of these charts look the same. A rip roar from the bottom. You got a new trend line. It coincides with the 50-day moving average here once this rounds up a little bit. Even though, see, here's the thing too, right? We talk about what's called a death cross, which is when a 50-day moving average crosses below the 200. And I was having a coaching meeting with someone recently, and I even said, you know, there are times you get a cross below and it just turns right back around and comes right back above. So it was a pretty big head fake. And a lot of times by the time you get this 50-day 200 cross, which is the death cross, price has already come down. So it's almost like you know, late to the party. When you get that death cross, price has already fallen 226 to about 194 before the death cross. You get a little bit of a move down and then it's rip your face off rally. Again, you can't account for this stuff. All you can do is use stops or use charts. You know, that's what technicals are, right? So the minute that it got above this downtrend line, okay, which coincides with this large candle green day, was a sign to get out if you're short, or get in if you're waiting to get in. Okay, this was too soon here because we didn't know what was going to happen. This looked like it was about to roll back over and then keep going lower. But you had a small gap up. I don't know what caused it. And then a big long, you know, when I say big long, this is a nice long green candle, sideways basing along the moving averages, another gap up above the 50-day, another gap up to the 200-day, a pullback to the moving averages, more movement toward the 200, and then a gap through it, and it's just basing. I mean, this looks great. Are you long this, or did you sell puts in it, Arthur? Because you got an increasing ascending now trend line. Oh yeah, thanks for reminding me, Baspa. I will post that link. I think I can post a link here for you, actually. Let me see if I can grab that link. You're long. Okay, good. So you're looking good. Now, for your long, you do have to expect somewhat of a pullback soon, right? I keep saying pullback, but when is it going to come? I don't know. Right now, you're at a resistance line. You have more resistance above. I know these lines aren't particularly perfectly straight. It's been a long day, but you do have, you have some areas now you can start to look as reference. Is it gonna come down like this to this trend line, find support, and then move higher? Is it going to break right through in the next coming days, and then use these areas here to bounce off of and go higher? I don't see it. I don't see it doing one of these. All the semis are getting good news right now. Sanctions are being lifted on some of the exports of them stuff. So I don't see it coming like this. I mean, there are what's called semiconductor. It's called the Bitcoin, like a Bitcoin winter. It's like a long cold winter. There are things that the semiconductors are cyclical. That's what I'm trying to say. They're cyclical. So we could enter a cyclical phase for the semis, but I think there is such a demand for all different types of semis these days. It's different than it used to be. There used to be cyclical times in certain sectors, and semiconductors had their winters, if you want to call it that, where it had a month, 3 month, 4 month time where they were just getting sold off and obliterated. But now that you have semiconductors in so many different products, from sneakers to cars, I mean, you name it, they're everywhere. I don't know that we're really going to see too much of the winters. We might see some profit taking, but and the whole shutdown of us exporting semiconductors, I think, is out the window now. For the most part, I think we're not going to be sending some of the higher functioning and more sophisticated ones to China and other countries because we want to keep them for ourselves for defense and stuff. But I do think we're going to allow a lot of other semiconductor so lower level semiconductors to be traded and sold. So I don't think we're going to have this type of a move lower. Probably just going to get some sideways action to an uptrend again. Back and fill, move up, back and fill, move up. The problem is if you're buying calls, you need the move for you to happen within a certain period of time. So your best bet would be long shares or to sell some leaps. You can sell some leaps. Like we put a position on, Frank's in it. We sold leaps on a stock and bought leap calls. And the symbol is, I'll even show you the symbol quick because it's actually starting to work real nice for us, is Celsius. So we sold leap puts on it and bought leap calls. So we're getting theta decay on the short leaps and price appreciation on the long leaps. And I don't know what percentage we're up on them, but we're doing good because we're getting theta decay. We actually are long the equivalent of about 1.35 deltas. So we're controlling about 135 shares with just buying leaps and selling leaps. So we're getting we're getting 1.3 for 1 to 1. So every time the stock would move up $1, we're getting about $1.35 on our position profits. And this is a beautiful, Frank, this is looking real good, huh?
Yeah.
I just hope it keeps it up. It's a great, pull back to the moving averages, move up, and we've got one of these TTM squeezes going on here where it's just about to break out. The red dots are starting to change to green. Okay, the Bollinger Bands, which are these red lines, you're going to see them highlight now in a second, like that. So they're tight, but they're starting to now widen as prices starting to move up. The MACD is above the 0 line, so that means it's above the 50-day, which it is. And we have the histogram beginning to turn from reds to now greens, and we have a MACD cross. So technically, it doesn't get much better than this one. The only problem is the RSI, is getting a little bit overbought. RSI is approaching 66, so it's a little. I wish it was about a 40 or a 50, but the reason why the RSI is 60 and change is because look at the price action. Price has been very strong. Every time it pulls back to the moving averages, it bounces right back up. So that creates a strong relative strength index. So that's why it's a strong. Now it hasn't rocketed up. It hasn't rocketed up, which is why the RSI isn't 70 or above. It's just been staying stable, and every time it falls, it comes right back up. So RSI is high. It's not overbought. I would have liked to see it. I'd like to see the RSI pull back a little bit. So if this price action can now do what I've been saying, all along, just do a little bit of sideways action, build up some more momentum, let the RSI drop to maybe 50s, and then we get to move up. That would be the best of all worlds. And if you guys want to get into this, we could talk about that when you get into the Discord tomorrow or next week, and help you get set up in that trade. You're definitely getting in after we're in, but there's still a lot of meat on this bone if price tries to get up to some of its other previous points. Let me just erase all this. It's got a lot of room up to the 50 level, 45, 50, and then up to like 60. So there's still meat on the bone if you guys want to maybe try to get in. And while we're talking about that, let me see if I can pull up a link, and you guys can try to get in tonight. If you click the link.
While you're doing that, Jim, I'll add a couple of comments in here.
Yeah, please do. Thanks, Frank.
Yeah. One is that some of the highest zip ups that the market has experienced over the years have come during a bear market, and the bull jumps following a drop off in the market tend to be sometimes very quick, very rapid, and they start quick, they go up quick, and they stop quick, and then end up resuming going down sometimes. And the continuation of the bear market. I'm not saying this is a bear market. I don't know at this point. Don't know that it's back to a bull market. I don't think it is yet. There's some new highs have to be hit before you can feel more comfortable that we're in a bull market. But the the time will tell whether we're actually in a bear market or a bull market.
I agree. And we've fallen so far so fast and run up so far so fast that I think both bulls and bears, they've got their butts reamed in the last couple of months, and it's going to be a little bit of a basing and sideways action as the dust settles on what's the next big thing that the market can trade off of, because tariffs were the thing that caused the market to falter. And now that that's out of the way, it's the reason that the market has kind of gained its composure back. And now we got to let the dust settle and see, well, what are we going to trade off of now? Interest rate changes, inflation, stagflation fears, interest rate hikes or lowering, right? Could be any of those. Yeah, I mean, there's a lot to see in what's going to be coming down the pike. Arthur, you're in. I see you just arrived. And Basspaw, if you want to just jump on that link, I'll get you guys set up tonight before the end of the night. I'll give you guys permission so you'll be able to see all the channels. And then, Frank's there. Feel free to reach out to Frank, myself, and, everyone will be warm to you, but just try to listen, watch and see what's posted. And have you guys ever been in a Discord? Do you know how it works? It's kind of self-explanatory. You just look for, okay, good. Arthur, you're familiar. Good. Okay. You're on your phone. Okay. Yeah. You should still be able to click that link and you can get in. If you have any problems, Basspod, I'm on Twitter and I'm on YouTube. So you can either try to find me either one. Jim Trainer or Uzi Options. Can you click that link on your phone, Basspaw? But if not, if you don't get in tonight, just send me a text, a message either on Twitter or on my YouTube channel. Like, just go to say the comments on one of the videos. Better off on Twitter though. YouTube is funny. You don't always get your comments for some reason. I think YouTube does some type of screening. Oh, it wants you to install the app. Yeah, you're gonna have to install the Discord app. That's a guarantee. It's an app, but it's a good app. It's a safe app, and it's cool. On your phone, you can do it just like pretty much like you're on your computer. Install the app. Yeah, of course. Do it tomorrow. I don't know if copy that link though. But if you can't get the link, are you on Twitter? If you're on Twitter, just send me a message on Twitter. Okay, good. If you copied it, then you should have it. If not, though, up above is my X handle, Jim Trainer 41 or Uzi Options. All right, and then we'll see you there. Okay, you emailed it. Perfect. Okay, then we'll see you whenever you're ready. But the Discord app is a good app. It's safe. Just making sure you're getting it from a good source. And with that, I want to thank Frank for being a participant and a co-host. Frank's, like I said, been around the block on trading for a long, long time, longer than me. And he's a skilled trader, and he knows charts, and he knows macroeconomics, and he knows a lot. So thanks for being part of this tonight, Frank.
Absolutely.
Yep. And maybe we'll do it again in the future. And thanks for being participants, you guys. Like I said, if there was only one person showing up tonight, we were going to have some type of charting. So maybe more will show up in the future, but maybe it was my fault. I may have done something wrong, because I know TJ was sending the link out to a lot of people, and it looks like we only got a handful. But you know what? As long as we had a good discussion, you guys got some good references to go on, and I learned a little bit from Frank tonight, and maybe we all learned a little something, and then it's all good. Yeah, build it and it will come. Hockey, baby. Oh yeah, hockey playoffs. Yeah. And who wants to look at a couple of old stogies like me and Frank talk about stocks and charts? All right, everybody. Thanks for showing up.
Take
Frank.
care.
Thanks again. I'll see
Good
you
night,
in the
all.
morning. Okay. Good night, guys.